G'day everyone, welcome to the weekly general update for the 5th and 6th of May. We had a very abrupt move on the S&P on Friday night, which I don't think changes the bigger picture too much, but certainly was more severe than what the patterns were suggesting we get. So that was a fairly important night on Friday night, so we really need to see how the US market trades over the next couple of sessions in this week coming. But let's have a look at the overall situation. Just a reminder on the general advice nature of this information. So the action for the week, the S&P ended up falling by 34 points on the week, and two-thirds of that was on Friday night. It really was quite a sudden move. So the pattern had been fine up until then, which we'll have a look at in a minute. And the other indicators that I was looking at, and we'll take a look at these charts as well, the Russell 2000, which is the small to mid cap section of the US stock market, the banking index, when you look at the German DAX, the Shanghai Composite Index, they were all looking fine until Friday night, and that certainly did give us an unexpected move in the market, certainly one that was more significant than I would have expected. Now, there was some jobs data in the US that was probably a little bit less than what people were expecting, but it wasn't that bad. But I think part of it is perhaps the market was due for a bit of a sell-off. There are some fears over the elections this weekend in France and in Greece. And I think it might have been just a general accumulation of several things that caused the market to sell off as it did. So is this a significant top? There is not enough information at this stage to suggest yes. So I've still have to stay with the fact that I think we're still just in a mildish correction. I thought that correction was complete, but perhaps we've still got a little bit to go, but I'm still not seeing any real dramatic evidence of a significant top, and we'll go through those charts in just a moment. Now the VIX index on the S&P 100 did kick up a bit, but again not very much, and copper was down a little bit, but nowhere near as much as you would have expected with the kind of panic we saw in the actual stock market. So my view is I think it might be a bit, what's happened on Friday night might be a bit overdone, but we'll see. Now, by comparison, our market gained 34 points on the week, so that was a bit more of a timing issue than anything. We'll obviously be down on Monday, but still we did okay last week. So we're still holding above this 43.50 break, and I guess that's significant because we did end up higher on the actual week, and we're getting a bit of an unwinding on Friday from an overbought situation. So let's have a look at some of these particular charts and indices, and the first one is the S&P, and you can see the pattern that we've been looking at here for quite some time. We were in the start of what I believe was a fifth wave higher. We had one leg up, we then had a sort of an ABC correction, which is normal crowd behavior, and that ABC correction got cut off a little short, or so it seemed, and then having gone above the high of the 17th of April, it looked as though we were now heading back up to 1440, and that was all intact until Friday night, which was a sharpish move. But you can see that we're starting to get down to be certainly down in oversold territory again. So my view at this stage with the data available is that the move on Friday night was probably a bit overdone, and I wouldn't be surprised to see a bit of a spring back. However, this certainly does change the pattern. We had a lot of strength in the US market, and that was the biggest move that we've seen in quite some time. So I think it does change the pattern a little bit, and I guess coming into the middle part of May certainly fits with the seasonality factor that I've been talking about for quite some time. So let's have a look at some of the other indices just to show you what I mean. This is the Russell 2000 index. So if we get up close and personal, you can see that it's really still pretty close to all-time highs and certainly pretty close to recent highs. Now the other point that I want to highlight, if we really pan back, so back here towards the left-hand side of the chart, we're back in July 2007. And you can see we had, and these are the indications of a top, we started to get some wild swings. So you can see sudden, very big plunges, and then recoveries, and then some more sudden plunges. So that was the precursor to 2008. And again, leading into 2008, we had the same sort of thing at a lower level, very deep and sharp plunges in the index. 2010, when we got a bit of a sell-off in May, you can see the moves down are very sharp and quite long. And again in 2011, the same sort of thing. But look at what we've got this time. The moves to the downside are far less, they're nowhere near as great. So to me, we're not seeing the sort of evidence that we saw in 2007, 2008, 2010, 2011. We're not seeing any of that kind of wild swing movement, and that's why I believe that we're not forming a major top here. I think it's just part of an ongoing sideways consolidation or correction. Let's have a look at the US banking index. Now this index doesn't go back all that far, but you can see that we're basically just a tick off all-time highs. In fact, prior to Friday night, we were virtually trading at all-time highs. So I'll just tighten in a little bit on that. So the banking index, I can assure you, would not be doing this if there was an imminent significant top in the share market. Let's have a look at the German DAX. Now it's obviously been higher in the past, but it really hasn't come off very far considering all the problems in Europe. The German DAX is not very far off its highs. Let's have a look at the VIX index, or the VIX index on the S&P 100. You can see we did get a bit of a kick up on Friday night, but it wasn't that much, and we're still under 20. The real fear in the market comes when the VIX index is up 30 and above. So a little bit of a tick up in the VIX, but really nothing of any real significance. So those indices, I think, certainly tell us a bit of a story. So we need more information at this stage. Now let's move on and have a look at gold. Now gold ended up down $20 on the week, but gold did hang up pretty well on Friday night, which was interesting, and actually moved a few dollars higher. So to me, it's still consolidating around the bottom of the triangle. We still need to see a break above 1690 to see that the next wave up is underway. The gold miners index in the States, the GDX and GDXJ, have a couple of times looked like they're starting to move up, but just cannot get any sustainable momentum, and it's really just defies logic why this is happening, why investors and traders have deserted gold stocks. But clearly there is no momentum in that sector at the moment. I'm still absolutely firmly of the view that that momentum will come back, but who knows when that will be. So I think for the time being it's just a matter of perhaps minimizing exposure to the gold stocks, and perhaps sitting on some of the higher quality ones, and picking up some opportunities as they present. Now oil was also lower on the week, and it's sharply down in the last two trading sessions. Lost $2 on or 2% on Thursday night, and lost nearly 4% on Friday night. So some quite sharp moves. And we've now got light sweet crude down below $100 again. Copper also fell a little bit. It was only down about 0.4%. It's back below the 380 support level, which I don't particularly want to see, but look, the move was pretty restrained on Friday night, and I would have thought if there was any real panic in the market that copper would have had a much bigger move than 0.4%. And here's the chart on copper. As you can see, we're really still just bouncing around between about $3.65 and $4, which is still extremely profitable levels for copper. Let's have a look at some of these other charts now. First of all, the chart of gold. So this is gold on a weekly basis. You can see big picture still sitting within this triangle, still clinging on to the bottom end of that triangle. And if we look at this on a daily chart, it gives you a bit better picture. So my view here still is that that we're still consolidating. We had 34 months up. We've been consolidating now for about 8 or 9 months, and that may go on for a couple more months yet, but I think eventually we are going to move higher. That's still my very firm conviction. This is the move on gold on a daily basis. You can see really gold has gone nowhere since we got into this tightening trading range around about the 14th of March, so we're nearly 2 months now, and it is getting tighter and tighter, so eventually we'll get a move out of that tight range. I would expect that move to be to the upside, but you just never know. Now let's have a look at the gold indices. This is the GDX reflecting the major miners, so you've got to say still in downtrend, which is really quite extraordinary, and remaining reasonably oversold. The junior index doing a little bit better. It's actually starting to seem like it's basing out now. Now, had two sessions down over the last two, but that looks more like a basing pattern to me. And if the wheels were really going to fall off the junior stocks, then I would have expected to see the GDXJ doing worse. Let's have a look at the oil stocks. This is light sweet crude on a weekly basis. So you can see it was only 5 or 6 weeks ago we were trading at 110. We closed at 98.5 on Friday night. So that's quite a sharp move down in oil, and again that pretty much defies the fundamentals as well. So I really have some significant concerns about what's going on in the futures market. I think there's all sorts of games being played there, and so I'm not really paying a lot of attention to some of these moves in the short term. You've really got to be looking at the trends. And this is Brent crude, not down as much, which in itself is interesting, but still easing off a little bit. It's probably lost $10 a barrel over the last couple of months. Now let's have a look at our stock index just for the record, because really I think this index is a bit irrelevant, because frankly it's just telling you what BHP and the 4 banks are doing. Primarily they make up the bulk of the index. So you can see we have been trending since about early March, so we've been trending now for a couple of months. We did have an unexpectedly sharp move down on Friday, and quite often that will basically precede what's happening in Asia, often precedes what's happening in the States, or going to happen in the States that night, because I guess traders perhaps have some kind of pipeline to the US traders and they have an idea of how they're going to behave. So our move was down, was fairly out of character, but you can see the RSI had been reasonably overbought, so I think this is probably just a bit of a technical unwinding, and we'll see what Monday brings. So that's it for this week. We are entering the May to August period, which traditionally can be weaker. It can also be sideways. It can also go upwards. Certainly in 2009, the market was fine at that stage. So I don't think this year is going to be as bad as some other May to September periods, and so I'm not automatically subscribing to the sell in May and go away view. I think this year will probably do a bit better than that, even if it's only basically sideways. So that's it for this week. See you next weekend. Cheers.
If you want to trade and invest with us with a big edge on the market, go to our website, specialistshareeducation.com.au. You can access our free video series on creating trading cash flow and smart investing. Plus, you may also register for our weekly Ask the Expert webinar.